Welcome to the Why Not Real Estate Podcast, where you will learn top strategies from world-class real estate investors, both large and small. Why not? Tune in and get started today.
I kid you not, I spent probably a whole year just underwriting for pretend's sake, like taking real deals on the market and just underwriting them repeatedly as the market was slightly shifting and changing, looking at different markets, different cities, different kinds of properties. Granted, it was single family, but I say that because after a year of doing that, there is no one who can come up with a single family real estate deal to me and pull one over me. I know the math inside out by then.
Hey, what's up, all of my real estate peeps? This is Brian Lucier with another episode of the Why Not Real Estate Podcast, where we believe investing in multifamily is one of the best asset classes in real estate. Although on many of our episodes, many of our guests, many of our shows, I've been shown the light to some other avenue of real estate investing, which has been very educational for me, and I'm excited because I always learn something new on the show. I am so pumped to have our guest on the show today. 6 months ago, we met at the Limitless Conference. That was Tarl Yarber and Ken McElroy's event down in Texas. And I went there by myself, just networking. And this woman was warm, charming, delightful, just outgoing, and just a pleasure to talk to. And I'm so happy to have her on our show today. So let me introduce her. Our guest is the visionary Chief Investment Officer and Limited Partner at Atlantis Felix LLC, based in Dallas, Texas. Known for over a decade of shaping long-range strategic plans, she doesn't just manage investments, she architects them with precision, integrity, and purpose. Her leadership is defined by her passion for financial literacy, data-backed real estate insights, and empowering others to think bigger and dream bolder. With her strategic mindset that blends analytical rigor and real-world impact, she's a trusted partner in unlocking opportunities and building profitable portfolios that stand the test of time. Her commitment to clear communication and ethical business practices sets her apart in an industry that rewards clarity and courage. Whether she's guiding capital deployment or helping others to see the why not in why now, she brings brilliance with heart and purpose and power. It's my pleasure. Ladies and gentlemen, all of my real estate peeps, rockstar real estate investors, please join me in giving a warm welcome to our guest, Chief Investment Officer and Limited Partner at Atlantis Felix LLC, Nida Kazmi. Nida, welcome to the show.
Brian, it is my absolute pleasure to be here with you today. You are such a lovely human being, honestly. From the moment that I met you, and I think it was your beautiful jacquard brocade jacket you were wearing at the event caught my eye and just started a conversation. And just from that to here we are, just 6 months later, having a conversation. I am absolutely delighted that we are still in touch and having this conversation.
I resonate with all of that. And actually, you hooked me up with Givens Andre, who's also been on the show. He's in Massachusetts. I've met him a few times at a few meetups now, and we've had a few follow-up calls. Another delightful person. So you attract wonderful people into your network, into your world, and I'm so excited to get started and share your story.
Thank you. Yeah, Givens is, in my eyes, an exceptional human. And he actually reached out to me also coincidentally on a School of Hard Knocks call. And we just developed a friendship from there. And it was just a great coincidence that you are both in Massachusetts, and always gives me great joy to connect other people. That's one of my strong suits, is to be a connector. And I knew he was looking to get into multifamily. You are so generous with your knowledge and your experience. So it was a great connect.
So today, you're the chief investment officer, but if I could wind back the clock, what was your world like? What did you do before you became a real estate investor?
I think I just used to be a big old dreamer about what I'm doing right now. Honestly, I think I spent the 10 or 15 years prior to what I'm doing now, having a very normal career, being an analyst and then a project manager and then a director of project management. And I have this fancy sounding rather, master's of psychology and an MBA, not an MBA, sorry, a business administration undergrad degree. And all of it just kind of culminated together of just dreaming about things and attending events in the past, like maybe some Tony Robbins stuff and some networking things. And I think it just kind of all culled together when I ended up working at a little company you might have heard of, S&P Financial. And I happened to work in the collateralized loan obligation department, or rather on a team that was responsible for developing software and products for collateralized loan products. And my boss then, Byron Stoker, who was he's just such a wonderful human being. At one point he was like, you work for one of the most biggest financial companies. You might want to get a basic financial certification just for your own knowledge. And at first I kind of hemmed and hawed about it. I was like, oh God, like numbers and finance, and you kind of like college days kind of come back up. But then as I started to go into it, I found some basic certification. I loved it. And while at work, the requirements ended there because work went on. I chose to then dive deeper. I was like, okay, let me learn a little bit more, but I chose to go fundamentally. And I started from actually, I would like to say I learned very quickly that there is no such thing as Googling anything about the financial or investment world and getting any clear answers other than financial and wealth management services by other brokerages and firms. So I think instead of doing what I thought was going to be a very quick dive into the financial investment world and learning about it, I ended up doing a very deep dive into it. And you look like you might have a question for me there.
Oh, I have. I've been writing them down as you're talking.
Okay, right. And so it turns out that there is no clear path online or any book per se, as far as I saw at that time, where it took me on a clear path from here I am at zero. I really want to understand what are the fundamentals of financing or finance or investment, and what are those tiered steps for me to learn about that. And so I had to kind of collate together over a period of months after a lot of research what that is, what it entails, what are those fundamentals, and with the help of my husband, who's always been very encouraging, and come up with a fundamentals pathway. And then once I got through that, I was able to come up with a more advanced pathway. And by fundamentals, I just mean things like understanding what is a 401k, what is a Roth IRA, what do all these things mean? What is life insurance? And I even went so far as literally taking a course to get certified to sell life insurance, although I don't, just so I could understand what it is. Because when you're talking to someone who's selling it to you, it starts to sound like way more complex than it truly is. And people like to use certain examples or scenarios to make it sound like this is this very cool thing that's just going to change your life. But in reality, I figured out like really all I need is just term life insurance for this much. And, you know, and so it really helped me when Byron, going back to my career, my boss, like he was very encouraging. He has two daughters, to go out there and learn. And then my husband, who also encouraged me, who actually partially started this journey when we got married, because when it came time to get the ring, he asked me, would you like me to invest in your ring or you? And
Wow.
I said, yeah, yeah. And it took me no time to say, well, me, obviously. So he gave me instead the cash that he would have put into a much more expensive ring and told me, now you can go and invest this money. And then we got a ring that was still pretty nice, but not nearly as expensive as normally they go for.
Wow. I think you told me that story when we met and you showed me the ring, and I was very impressed. And now hearing it again, it's like, wow, what a good guy. He he
Great
under,
guy.
he understood you.
Yeah.
He knew what he was going for. I have some questions, and you are
Yes.
correct. I do have questions. So, analyst, project manager, have you always been like, I'm assuming from college in your business, you have a business degree. Was it always in the financial industry or was it some other industry? Was it always finance?
No, it was actually never in finance. I've largely been in software development. So you're usually overseeing together with the product manager, the product development team's work and tracking project progress over various different products and clouds and that kind of stuff. But it usually had nothing to do with real estate. It was, I've been in the hospitality industry, the psychology industry, just a variety of different things that had nothing to do with investment.
So interesting. So, software development, hospitality, eventually finance, business. You, you sound like the kind of person, if somebody asked you what time it was, you would build them a Swiss watch.
Right. You actually pretty much nailed me there. I am a collector of information, which may or may not be used in the future.
I think it's super interesting because software, hospitality, psychology all resonate real estate.
Yeah.
Real estate, I've heard 100 people say, maybe more, it's a relationship business. Whether that's with your investors, your partners, your tenants, your vendors, it's building that relationship. So you've given me a really good foundation of where you were when all this happened. And then Byron, was that your boss's name?
Yeah.
Byron, Mr. Stoker, kind of fanned the flames for your growth. And it sounds like that you caught fire from there. So you learned all these different things, aspects, insurance, everything that you had mentioned. At what point did you turn over the leaf and say, look, real estate?
That's a really good question because I don't think I went looking for real estate myself personally. I think it found me in a way. As I was looking over all of my research and then studying and whatnot, there was a point at which a really good friend of mine, I've known him from college, Anthony, and he lives in Canada. He's actually one of those wonderful, amazing humans in my life who also encouraged me. He's in real estate, also used to be part of the Toronto Police Force, by the way, all these fun backgrounds. He called me up one day, figured out, what I was doing, what I was looking at. And he said, I think it would be a really good idea if you just looked at real estate deals in the market and just analyze them, just for example's sake, and just do it over and over and over and over. And at first I was like, man, that just sounds kind of like painful. And he was like, I know, but just do it.
So,
Go ahead.
Anthony, thank you for your service. If you're watching this, I respect law enforcement to the nth degree. He was involved in real estate?
Is,
Is at the
yeah.
time where he kind of like prodded you to, hey, why don't you do some underwriting and look at deals? Was he already a real estate investor?
Yes, so I've known him since my college days. I've known him for pretty much 2 decades, and I remember even back then, his father is an entrepreneur in textiles, but even back then, Anthony was purchasing downtown Toronto real estate, new builds, new developments, and I did not understand it from A to B at the time. But he always, of course, that was always in my periphery with him, and he's a good friend, and we're in touch more often than not. And so when he found out I was kind of inching along on this side of things, he brought up that as a suggestion. And I think it was probably the smartest tip that anyone could have given me or anyone in real estate. Because I kid you not, I spent probably a whole year just underwriting for pretend sake, like taking real deals on the market and just underwriting them repeatedly as the market was slightly shifting and changing, looking at different markets, different cities, different kinds of properties. Granted, it was single family, but I say that because after a year of doing that, there is no one who can come up with a single family real estate deal to me and pull one over me. I know the math inside out by then and now.
That is a fascinating story. And I've met hundreds and hundreds of real estate folks. And, you know, what you did for a year, you said as practice, just to learn. Some people like try to skirt around that and say, well, you know, I'll look at a few deals and then I'll buy something. And then sometimes it works. Sometimes they wish they had done more research. You got your chops down like a master before you even, I'm assuming, put in your first offer. Like you knew.
Yes, correct. I did that before. So I spent in total, I spent 2 years self-educating. And the second year, I also spent one whole year doing the practice underwriting.
Huh. I'm going to take a page out of Anthony's playbook here. Have you ever underwritten a syndication?
No. And
Well,
that is my next hurdle or challenge, if you will.
we'll swipe right on that one for now.
Yes, I agree.
But I planted that seed. Let's talk later. That I think you would be a tremendous person to work with. But let's make this back to you. Let's put the spotlight back on you. So, Anthony, college buddy, always invested, entrepreneurial, family was entrepreneurial. You're pretty much a genius because you just analyze and look at something and say, okay, I'll build that Swiss watch and figure out how it ticks. Perfect. Were there any other influences while you were growing up or studying or anything else that exposed you to real estate as a possible answer to financial freedom?
Not necessarily. I will tell you that I had some interesting circumstances growing up, almost juxtaposed. Like I grew up on a very, very large estate that my grandfather had built back home in Pakistan. And it was intended to be large because he had a lot of children. He had 9 children. It was wonderful as a kid because you could have one adult who was tired and then you could just run off to the other one who was ready for you. And also, you know, going downstairs to the backyard, we had a huge chicken coop and we could have goats coming in and out anytime, or a cow even, sometimes a camel, just for eating purposes. And it was a great life. You know, you had a variety of adults to entertain you and love you. And it was a huge real estate, truly, with a massive front yard and a backyard. And that, because that's what I'd always known, that was my normal, right, as a kid. And then when I was 8 years old, we had the fortune of being able to move to the United States. And that was back in the early 90s. But also, it was the very first time that I had ever lived with my mother and father. I had never lived with them until then.
Huh. Well,
Yeah.
well, I got to unpack that one. Bring me down that rabbit hole.
So my father was a British naval officer at the time. And so he was gone more often than not. So I think my grandparents felt that I would be safer living with them because my mother at the time was basically alone. My father wasn't there, so they would be alone in their smaller house on a separate lot with my brother. So I think they just felt safer if we were together with them in the bigger house that was more protected. So I never lived with, my mom and dad and their dynamics until then.
Wow.
Well, when you suddenly, change careers and move to the United States, there are times when you have to work a little harder in the beginning. And so I went from this 10-bedroom massive estate to a 2-bedroom apartment with my 2 other siblings and my parents. And that is a completely different dynamic. And as a child, you're very dexterous and flexible. And so these things don't really matter as much as the environment matters. So you kind of go along with it. You're kind of busy learning English and the new country and how the social activities work in the new country and whatnot. But over time, as I came into my teenage years, there was a little nagging thought that would come in my head that would say, but you're meant to be much wealthier than this. You're meant for more. And it's one of those things that you think, well, this is just in my head, right? Like things the little kids want. In the 90s, everything was about, men leaning against these expensive cars and wearing expensive watches and the celebrity obsession and the elusiveness of that celebrity. And there was a day, I don't know who that lady was. I don't know where she came out of or what happened, but she just, for some reason, read my palm. And I was a teenager. I think I was 15 or 16 at the time. And she said, you are meant for much more than where you're at right now. And she used the term wealthy, and I'll give you my definition of wealth in a second. But she said, you're meant to be very, very wealthy, and you're meant to be working with a large amount of money. And I think I heard that, locked it in my subconscious, and forgot about it as I went through life and college and the struggles of early, 2008 and whatnot. And it wasn't until I met my husband who then helped me prepare for coming into this world bit by bit by bit that I managed to be able to meet that person who I had thought that I was meant to be all along.
That's an amazing story.
Thank you.
It resonates. I mean, I don't think life has many coincidences at all.
No.
I'm reading a book right now by Dr. Joe Dispenza, Breaking the
Mhm.
Habit of Being Yourself. And when you said you were meant for more, and you were thinking that as a child, and then this woman reaffirmed it in you, it's like those seeds got planted. And
Yeah.
it took a while for that ground to break in your heart, in your soul, in your mind, in your world. But it was there, and it's,
Yeah.
who knows where it could go. Isn't that the
Right.
wonderful, wild part?
It is. I sometimes look at who I've become today, and I just know that me, even 6 years ago or before, she would have looked at me in absolute awe. Like, who are you? Where did you come from?
Right. And where are you going to be 6 years from now, or even 6 months from now? Right.
Right. Right. And I think I finally come to that point that there's no more chasing of that unknown. There's a lot more enjoyment now because I think age has something to do with it too. Age as in not, oh, I feel old, but age as in there are certain passages and rites of age as you pass through them that you mature into. And if you've taken the time to really decidedly enter into each phase as you move into it, you can have such a beautiful experience and it becomes a journey of enjoyment rather than a chase,
Right, right.
if you will.
Enjoying the now.
Yeah.
I love that. So you've this is so cool. I've found out more about you in the last 15 minutes than in all the time we sat and talked. All these pieces were in alignment. Anthony kind of lit the flame. You did the underwriting. You studied for 2 more years. What was it? What was that? I guess the big question I have is why real estate? What was that moment where you said, okay, I think real estate is something that I should be doing?
Yeah. Well, I think to explain that, let me take you back a little bit. So when I first got married to my husband and he offered me that whole, invest in you version, uh, I allowed him to help me invest that money for me to start with. And he at the time said, it was so generous of him where he said, well, I would like for me to pay all the bills and for you to pay off any of your debts that you may have. Coming from a South Asian culture, we are not fond of debts. We prefer to buy things in cash typically. So homes and cars, everything's usually purchased in cash. And he had the same mentality. And so he graciously offered, hey, you do not have to contribute to the house or to the home running of the home, but I want you to take your earnings from your job. And so I paid off all of my credit card debt. I had owed my dad some money at the time. I paid him off. I paid off my student education loan. Like I paid off the car. I paid off everything over a couple of years. And then
Impressive.
as I eventually got in,
Impressive.
thank you. Oh, it was such a glorious day when I made that last credit card payment that had been like hanging over me for all these years. As you learn, they find you on college campuses, man. They get you started early. Yeah, it was a journey. And also consumerism. I was young and
Yeah.
dumb, and you fall into consumerism and you buy things. So we got rid of all of that debt. We were in an apartment. We did not own anything because we were in New York at the time. And then we moved to Texas. And by that point, as I started to learn about all of this stuff, I then sat down with my husband, and we made sure to get all of our foundation settled. So that's all of your 401k, your life insurances, your anything that needed to be addressed at a fundamental level, right? So I'm setting this part of the story up to say that it didn't move from learn, practice, and then buy. Like that's not how it went. Like it was a really deliberate movement of, okay, as I'm learning about finance and investment and what a good investor makes, you do have to address your foundations first. Are all of my bases locked and loaded? I remember there was a moment when I just insisted we have to get our will done and we have to get our trust done.
Okay.
We are not moving an inch forward until we get these pieces done, right? And it ended up being a really important piece that was required multiple times in the future to have your trust available and ready. So we did that. And then as I continued to learn, I actually explored commercial at first back then. And at the time leading into it, the years prior were really lucrative for commercial. But as we were entering that particular year, it was starting to kind of like be on a more downward trend. And this has all happened in the last like very recent 3-ish years, right? So you know what the market's done. And then I looked at commercial and it was a little too big and scary for me. And so then we decided, well, the most natural direction is to look at single family real estate. And again, the Anthony had a hand in helping me with this because as you're looking at, real estate is a very broad world, have lots of different asset classes. So we selected and landed on single family at the time. And then I saw people who had programs for $10,000 and 15 to help you buy your first property. was like, this just sounds ridiculous.
Couldn't we use that for a down payment instead?
Right. Right. I mean, I just like, even though I was like somewhat complete, I mean, a little bit uneducated at the time completely, even then I knew, I was like, something's wrong about this, man. Like, why would it take, you $10,000 in only 3 months to teach me? Like, I don't understand. So luckily that's where Anthony's advice came into play, where I had done all the underwriting, and eventually I spent more time on it and I continued. And then eventually one of my other prior contacts, one of the people who actually helps with the Limitless Expo, which is Jason Hartman, I had known him from literally 14 years prior. I had met him at the very first podcast movement event back in 2013 or 14, was it? So not 15 years ago, but like 10 years ago.
Okay.
Yeah. And it just all kind of like clicked into place from there.
Wow. So not learn, action, get started. You went through all this stuff. You targeted single family homes and you were locked and loaded. And then how did you take the first steps? How did you go from this is what we're going to do to doing it?
I think the first time I really did.
Hold on. I want to add to that question. Sorry to interrupt you.
No.
From thinking about it to doing it without spending $10,000.
Right. And honestly, that is where Hartman came into play. Hartman typically helps other investors who either have very little time and a lot of money to divest and invest somewhere, or investors who are newer to the game by understanding the market and the game, but also by helping you find deals based on relationships that he's already established over a period of time in specific markets.
Was Hartman the gentleman wearing the black suit off to the left of us while we were talking? He was on the phone call.
Yes, very, very good memory. I think Hartman was there at the time. He was like wearing like a black blazer, like
Yes.
black jeans and shirt.
Yes.
Yeah.
Very low-keyed, very calm.
Yeah.
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 Okay.
And I've been listening to his podcast since then for a long time. And why I like Hartman is, if you ever listen to the advice he gives, it's almost always fact-based and data-backed. So he's probably one of the only 3 people that I listen to online. The other one being Clear Value Tax is an account. I think his name is Ben, and he puts out these like short, to the point, 8 to 10-minute videos, but they are primarily based on economic and government policies and how it's impacting us as investors. And I can't remember the third person because I've probably not listened to them in a while, but Jason is one of my primary folks that I used to listen to. I don't listen to him now only because I feel that I've learned quite a bit. And Jason has always been the kind of person who doesn't try to sell you anything. He almost actively discourages you from buying from him. And I've had that experience with him many times. And not that he's saying don't buy from me in that way, but he's saying, look, I have options 1, 2, and 3. You're probably at a place where you're better off with the lesser cost option of 1. You're not at 2 and 3 yet. You don't need to be there. Start with 1 and do 1 10 times, right? And then once you've got the hang of it and you feel like you're ready for more, then we can move into whatever the next step is. He's also very honest about why he doesn't invest in certain strategies. He's not a multifamily person, and he has his reasons for it. And it's not because multifamily in his claims is wrong or a bad deal. It's just, it's not part of his strategy or his approach. And that's another thing I learned from him, is to have your playbook tight. Like, understand what your playbook is.
Yeah.
And do you remember we were also talking to Henry Washington at the table at the time?
Probably not by name, but if you spark the conversation, I may remember.
Okay. Do you remember? Oh, you might not have been there for that particular thing. Henry is somebody who is on the. He's one of the podcast hosts at Bigger Pockets,
Okay, yes.
and I did not know that. Yes, the
Big tall
tall.
guy.
Yeah,
Yeah, he was
and
spatially, he was off to my right behind me. I just remember stuff.
yeah,
Okay, yeah.
he's. I did not know him. I did not know what he did. I just happened to see him at the table, and I think the first thing that probably got my attention with Henry was there were two very young men, like in their 19 and 20 years of age, who were at the event for the first time, and they explained what they do and what they're looking at and blah, blah, blah. And as they were leaving, Henry made it a point to stop one of them, hold his hands while shaking it, and spent a good 2 minutes explaining the importance of what journey this gentleman was about to embark upon, and how important due diligence was, and his integrity and consistency. And when I tell you that that is probably one of the most profound moments that I've had the joy of being a part of, that message was meant for the gentleman, but Henry was teaching me in the moment who he really is at the core of his heart. He really means it when he says he wants to help the next generation and help others invest appropriately. And at the time, Henry also gave me a really great perspective. We were talking about strategy and locking in your playbook. And I was of the opinion until then, or the perspective that, hey, you need to have this extremely large portfolio for it to mean anything, to have a meaningful income from it down the line, etc. And Henry forced me to rethink that. He said, well, have you done the reverse math on how much money you think you'll need every month?
Right.
Right. And
Yeah.
then how many properties is that if you just own the properties outright? Okay, well, it's suddenly the number changes from a very large amount to a very small amount if you own them. So the strategy went from, instead of, hey, you don't need to try and acquire this huge volume portfolio, you only need to acquire a fraction of that, even if it's leveraged, and then slowly move to unleveraging them. Like you move to here, kind of like an old school typewriter, and then you move back and like deleverage them all. And it just blew my mind. I was like, oh my God. That changes the headache and the workload for me immediately.
And I'm connecting the dots here. You, way before all of this, established your trust. So I'm guessing that these pieces from your monopoly board go into there where no one sees it, no one knows who it is, and they're probably looking at a lawyer as the trustee, so you're indemnified from any type of risk or liability.
Yeah.
Which is a really good idea. And don't say anything more about the trust. Nobody needs to know. It's a really good idea because if anybody does get cute, typically when they look up that trust and see that they're going to be trying to sue a lawyer, it throws a wet towel on their plan.
Right. Right. I mean, I don't think that I would claim to say, oh my gosh, I have everything completely crossed and dotted to the maximum nth degree.
Well, who does?
No, right.
Right.
Unless you're, a multi-millionaire with a family office whose sole dedicated job it is to do all of this for you. I don't expect anyone to. But it's almost.
Yeah, I'm sorry. Even
no, go ahead.
a person wakes up in the morning, puts on his pants one leg at a time, has to look in the mirror and figure out what's his purpose for the day. I mean,
Right.
That goes all the way to the mechanic who's going to put tires on someone's car, to that family office guy. It's nothing is ever guaranteed. Nothing is ever set. So you're always learning. So you're always going to be evolving. The conversation we're having now, 6 months from now, 9 months from now, you can say, wow, I can't believe I said that because now this is how I feel. And to Henry and all these other folks, the core is the integrity. I call it a buy box. You're calling it a playbook. Knowing know your space, right? You
Yeah.
don't forget that shiny object syndrome. Like, well, they're doing that, so I'll do that, or they're doing that, so I'll do that. So no, 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 no. What works for me? What makes sense? That's it,
Yeah.
right? I get approached a lot for this or for that and for that. It's like, well, if I don't understand it, I'm okay. It's good for you. I'm probably going to do that dull and boring thing that I've been doing for 25 years that got me here. I'm okay with that.
Yes.
Back to you. I want to hear more of your story. So all these pieces have come together. Hartman's podcast. You want to give a shout out to that?
Yeah, I think it's just called the Jason Hartman podcast. He's
Jason?
got a couple thousand episodes on there, man.
So he just started.
Yeah. Yeah, he has been very consistent and at it for well over 20 years in terms of what he does. I think 30 years now, but maybe 10 or 15 years for the podcast. Very
Wow,
consistent.
I've got a lot of catching up to do. This is my third season. All right, so here we are. Was Jason the catalyst that got you to where you were buying your properties?
Correct.
Oh,
Yes.
yeah.
So Jason has a well-developed network of brokers, builders that he has developed relationships with, and experientially, he purchases from them, through them, and whatnot. And he's in very specific markets. He tends to be in linear markets to slow growth markets. So somewhere like a Tennessee or an Arizona, which Arizona was not very linear. It was pretty catapultic recently, but it has kind of slowed down again. And he tends to focus on single family homes as well. He does not do usually any alternative strategies, like, say, we're looking at a lot of like split pad strategies now. But although he has started to look at that too now and develop those relationships, it just was not needed until now. He does not do any multifamily or commercial or retail or any of that.
Okay.
So what ends up happening is that you either have two categories of people: less experienced, or the ones who don't have relationships, or people who just have a lot of cash that they need to park somewhere, and they come to advisors who are on Jason's team and have been for a very long time. They have their own specialties, their own clients. Specialties, I mean, by that I mean certain markets or builders and developers, and they will connect you to those relationships and support you along the whole way of acquiring that deal, whatever that deal is, and helping you understand what that deal means too. And there's some support afterwards as well if you need any help connecting, any advice you might need. It's all like, I don't have to pay anything extra for that. There's a deal that they make between them and the builders and whomever, the brokers. And outside of that, I have full support from Jason's team. Now, having said that, I only needed that help once. So once I had the hand-holding help to get into the market or the deal once, I knew what to expect. And then I built my own relationships in the market separate from Jason's and moved on my own.
And I bet Jason is very proud of you that you did that.
I think so. I think he's almost pleased that after like 10, 15 years of like going from nowhere near real estate where I met him, I was at a podcast, to all the way over here. It's two vastly different versions of me.
Wow. This is a great segue. So now I'm going to turn on, you just mentioned two different versions of you. So your real estate journey, what's been the span of time since you closed your first property? 3, 5, 10, 15 years?
Seriously?
Sure, sure.
2.5 years.
All right, so 2.5 years since your
Yeah.
first close.
Yeah.
How
On
many-
investment, not my residence is obviously different.
Yeah. I don't look at a primary residence as an investment. That's more of a necessity. Okay. So
Yeah.
you closed your first deal 2.5, 3 years ago, but how many years of preparation before you pulled that trigger?
Two
So
two
5.
years. Yeah.
Okay, so
Yeah.
your 5 years of experience are more like a fire hose of gushing water than
Yeah.
a sip from the fountain. Because from what I see of your personality, you're in 1,000%. You're totally emerged. A year of underwriting, right? All of these disciplines that for you are normal, and this is just the set way that you're going to do it. So your 5 years of experience, and you're putting me to shame, but that's okay. To get to the point where you are now, here's the big transition. It's the time machine. I love this part of the show. If you could go back to yourself 5 years ago, knowing what you know now, you've done deals, you've graduated to the point where you've built your network and you know how to do this. The training wheels are off the bike. If you could go back 5 years ago and tap yourself on the shoulder and say, Nida, this is what you should do, and this is the advice I have for you. What advice would you give to yourself if you could go back in time and you were starting over?
That's a good question because all of us would love to go back and sign up for the lotto with the winning numbers. um, really, I think one of the only changes I would make, because truly I do not think that I left anything on the table when it comes to single family deals. Before we got into single family, when my husband was doing normal investments, you do get the opportunity to look at syndications and crowdfunded deals and other types. And one thing that I didn't have an understanding of in the very early days is how the economy had been and where it was shaping up to go. Because I was just starting out, I did not understand the economic cycles at the time. And so really, I was coming in at the tail end of all of that abundance, all of that carefree abundance, might I add. So a lot of the underwriting that was done on commercial or multifamily deals was based on an assumption of continued abundance, meaning continued abundance of those low rates and market demand and all of that. So the only real thing I would go back and tell the old me is maybe two things. One, maybe I would have wanted to dive into understanding securities better, just the same way that I did with life insurance and other things. And that's neither here nor there, but it would have been a really good thing to understand for the market that we've had in the last couple of years, especially. But also more importantly is to understand underwriting for commercial deals before you invest into it in any shape or form. And I think a third cautionary piece of advice would be to understand how you can do background checks on people that you're doing deals with.
Amen.
Yes, that was a look of I know what you're talking about.
Well, I've met people who've attended a webinar, a seminar, or something like that, paid that $10,000, drank in a certain amount of Kool-Aid, and then they go out on their, I know what I know with blinders on, promising more than they could ever produce. I like to look for the person who's been doing it a couple of years, follow their track record, vet them as people. One of the best tips is to go out to dinner with someone and see how they treat strangers. So you would have wanted to looked at the market not with the rose-colored filters of constant abundance. You would have wanted to learn how to underwrite commercial deals, which honestly, Nida, if you told me you were going to start figuring that out, I'd throw you a few spreadsheets and just stand back and watch the flames. That would be fun. And then vetting people, and that's, anything. That's all the way down from who your accountant's going to be to who you invest with or anybody in between. Really good advice. Any other advice you would have given yourself if you were started over?
I think I am proud of how I approach things. So I don't think that there's all that much that I would have changed. I was luckily getting into it at an age and time of my life when I was maturing into my 40s, and I took a very deliberate effort into taking a lot of time and deciding what my new set of values and principles will be and how I'm going to define myself. And that person, who I used to be was someone who was much more excitable and quick to get bored and wanting to move on to the next thing and the next thing. Very, symptoms of being ADD. But as I moved into my 40s, it was a time to enjoy things, but also master things. It was time to stop being a jack of all trades, as you tend to be when you're ADD, and be a master of something. And what I especially wouldn't change is my ability to make relationships and develop relationships with people, because my first Limitless Expo is where I met two of my biggest mentors who have probably ended up saving me more grief and money, if you will, than anything else and any program could have. They have a combined amount of experience of probably like 90 years. There's more of them in the group. And I don't know what happened. I just randomly met them, and somehow they trusted me enough to listen to what I had to say and vice versa. And I have such a wonderful relationship with them, where we kind of are able to advise each other on things that we have found, on deals, on markets. One of the things that I have focused on within that group is to look at tax sheltering strategy. That's part of my fundamentals. My winning formula is not just to make more money, it's how to keep more of your money.
Wouldn't that be nice?
Yes. And so, we kind of help each other out with resources and knowledge and research, and it really, really helps to kind of spread the responsibility. But also, because they've had such a long time experience, they're able to help prevent me from making mistakes, major mistakes at least.
You mentioned something, and I made note of it with exclamation points. Preparing for your 40s. What's that? Is that coming up in like another 8 to 10 years?
Right. About at least 15 years.
So you're 15 years away from planning for
more or less.
That's
plus
good.
or minus, plus or minus.
Yeah. I mean, I can see you in, no, you're not 40.
Yeah, it doesn't, in my head, I'm still 26, I promise.
Wow.
But when I look at my driver license, it definitely says 42.
Don't look at it.
No, but what I always find interesting is when I talk about age or coming into that phase of life, people always assume it's because I'm lamenting being old. And I always have to correct people. I said, I'm actually very proud that I was able to make it into 40. I've earned this, by God. So, life can really do a number on you over 4 decades. And so to reach this is huge, and to be able to intentionally move forward into it is even bigger of a privilege.
I got to share something.
Yeah.
So if you would have met me 5 years ago, I didn't look like this.
Okay.
I was 315 pounds.
No way.
And now Grandpa's got games and guns.
Wow.
At the gym where I go, there's a guy staying down here now visiting. The guy looks in his 40s, and he's stacked. He's built so strong. So we started talking, and he asked me, "Oh, how old you are?" And I tell him my age. I says, "Well, how old are you?" He says, 70. says, you got to be kidding me. You look 40. Doesn't have a gray hair. His muscles are ripped. He's got the body of like a 20-year-old. So yeah, age is a game, right? It's how do you treat yourself in those different stages of your life?
Yeah.
And so different stages of life, segue right back to it. You did a really good job giving yourself the advice if you could have gone back. Now, here we are today. It's January 2026. Knowing what you know, I mean, what you've seen, what you've looked at, what advice would you give to that newbie who's thinking maybe real estate and they're sitting on the fence? What advice would you have for the newbie today?
I actually think, given where the market is right now, there's nothing fun about the market right now, especially when it comes to real estate. I mean, I would say there's nothing jazzy and exciting going on. You might have opportunity for the ho-hum, boring kind of deals still. I know they're there. I know they're happening because the market's very stagnant and things aren't selling. So there is opportunity for it. But you're certainly not going to be getting 10% cash on cash these days. So I actually think for if someone were to come up to me, and people have, and ask me to distill like everything I know about real estate in 30 seconds or less, I know it's happened to me. I would tell them the best thing you can do in this kind of a market as a brand new person is to do what I did, is to go and learn everything from zero and upwards and understand it inside and out. And the reason for that is that unless you're very experienced and you're an accredited investor and you have that ability to have plus or minus wins and losses, this is not the best time to get into the market, but it's the best time to learn, because after another at least year or two, which it will take to learn, the market will be on the upward trend, more likely than not, given past patterns. So the best is to network, to meet people, go to events, learn, educate yourself, and figure out what is your buy box, what is your strategy, what is my playbook.
That is gold. Knowing your buy box. And as I started out, I didn't have mentors, didn't have training. You know, I had a conversation with my accountant and he showed me a depreciation schedule that says, okay, well, maybe I'll do real estate. And that was it. And then the rest of it was like a Carlton Sheets course.
Yeah.
Knowing your buy box, I can't tell you how many years I was diverted off of my core by chasing the shiny object.
Yeah.
You know, that other thing that somebody else did that I don't have a passion for. That's not my thing. I don't want to, and I'm not going to bash anything, but there's just some things that aren't built for me and I'm not built for them. And that's okay. You have your buy box, your playbook. I've got my buy box, I playbook. Anybody who's watching this and learning from this, you could come up with a totally different answer. I could ask 12 different investors what their strategy is, and I'd get 15 different answers.
Yeah.
So that's fine. Networking, educate yourself, learn from zero to infinity and beyond. Know your buy box. I'm assuming you mentioned the market, so know your market cycles. You know, where are we in a market cycle? And, you know, there was a point in time where I was buying property religiously and I had no idea what phase of the market I was in. And when the lights went on, I says, oh crap, I better start unloading some deals.
Yes.
And, you know, we were ditching dogs at that point, and thankfully so. But yeah, what other advice would you spotlight for a newbie today?
I think it's very easy to fall into as you go along in your journey, to fall into that, oh, I made a mistake. Oh my God, how come I didn't see that coming? Why did I do this? I think it's very important to understand that sometimes there are situations where it is completely out of your hands. You can have like the best underwriting, the best analysis, in the best of conditions, and a great person sitting across from you at the table. but the market can suddenly shift and turn it into something that became a bad deal. And it's nobody's fault. And you have to be able to learn to absorb that as a lesson rather than I was dumb or I could have, would have, should, into those thinking patterns. And the reason for that is because none of us could have expected the last 12 months economically. By all means, we should have been going into this way and we were doing this and this and this and this. And yes, the previous decades were a little bit more predictable, but we are neither in a national economy or a global economy that allows for that predictive patterns anymore because of how technology has changed and how politics are changing and all of the above.
Wow, the unknown unknown.
Yeah. Yeah. So tempering your acquisitions is a huge part of this. I see a lot of people there's one guy that I follow in part for his just approach and strategy on things, but then I see him talk a lot about acquisition. And I'm like, okay, but your portfolio has to be tempered to account for these massive shifts. And it can't all be this or that. Like I personally know people who are completely in the crypto game. Oh my gosh, real estate is a scam. 401k is a scam. I mean, everything is a scam, but crypto is not, right? And so everything is over leveraged on crypto or over leveraged on real estate. So there's a lot of time that I spend doing something that I have not heard a lot of other people do, which is to continuously track your portfolio allotment and how it's diversified and how it's spread, what those percentages are, what those projections are, spending a lot of time looking at geopolitical shifts and how it's impacting economies, just understanding where you're at constantly. It's if you were to simplify it a bit, it's like when I heard a mentor say, I looked at my bank account every day. Especially when you don't have a ton of money, because you always want to respect your money, but always want to know where it's at.
Mm-hmm.
You know what I mean? And so that's what I would definitely advise.
See, I'm a genius. I can predict crypto.
Some days I can too.
I swear it. I mean, as soon as I buy it, it goes down.
That has been my experience too. Genuinely, I'm like, seriously, every time I buy.
Yeah, it's like, okay, boom, there it goes.
My biggest regret, if ever there was one, honestly, I remember clear as day, there was a point in 2010 in which I had the opportunity, somebody had brought up to me buying BTC, and it was 10 cents at the time.
Oh, God.
Yeah. And I remember, I think back on my circumstances, I'm like, well, I could have probably afforded $500 worth or even $1,000 worth, but I just didn't understand what it was. So I didn't bother with it. And boy, if I had just bought $1,000 worth at the time, oh, I would have banked today.
It was about a year ago, or maybe a year and 3 months. It was at 70, and people were saying, oh, it's going to pop up to 120, and it did all that. And okay, I caught some of that, but now I pulled back. I bought property, as you know, and I did what I did. See, I use those type of investments to generate wealth so I can take it out and buy real estate.
Correct.
That's me. I'm boring. I'm dull. That's my strategy. For me, it works. I'm happy.
And as Jason would tell you, boring works.
Right.
know, and that's part of it. Like, as someone who used to be very excitable, I use that word more preferably than ADD, it's very easy to want the next shiny, cool thing that will make you millions overnight. But the real success is in the boring, consistent overtime strategy. And that's the other thing. I don't know why and where, why people started to give this impression that real estate will make you money overnight. No, it is the long play. This is not a short play, unless you're flipping houses. And even then it can become a longer play. But this is a long play. This is not your mama's like day trading platform by any stretch of the imagination.
You had mentioned a little while ago, you meet these people who ask you to sum up everything you know about real estate in 30 seconds. Here's mine, right? Don't wait to buy real estate. Buy real estate, then wait.
Yeah.
That's it. It's boring,
Yeah. Yeah.
right? It's not a fast moving train. You can see the market because it always has to go through a cycle. It's like a train on a track. It's never going to skip a cycle. So once you know that routine, you know the cycle, you get used to it. It's like clockwork. The train shows up, the train pulls out, and that's how it works.
Yeah. I
So
agree.
I know from the green room, we're not going to dig too deeply into your portfolio. I respect that. But I've got a little bit of a deep dive question, and if you want to indulge me, I would love that.
Okay.
What is the best deal you ever did? What type of property was it? How did you find it? And how did you finance it?
So I honestly don't think I have enough deals under my belt to where I can say the best deal ever. But I would say the best deal has probably been one where I've been able to leverage my mentor group. And the reason for that is because there were more people that I was able to bring to the table for the same thing. We were collectively able to leverage up and down the things that we wanted to for a sharper deal, so better returns.
Okay.
And
So,
that came about, so that came about because of my relationship with my mentors that I had already been developing for a while.
so for your playbook, buy box, single family?
No, so actually, this is a tax sheltering strategy.
Huh. A
Yeah.
twist to the plot.
Yes. And so what happens is, a lot of the times, anything you come across, buying or tax sheltering, you always have these little middle managers and these brokers in between that want their cut. Okay. And I'm that person who's like really doesn't have all that money to throw around. So I'm doing the math inside out. Right. And I'm like, well, but once you add your broker's fee in here, this doesn't really make it a good deal for me. I don't like this. So then we kind of push and shove and kind of leverage the volume that we're bringing to the table because of the number of people or how much more they might be purchasing. And then you can kind of adjust the levers so that you make a better deal. They don't always love it, but it's rather you would have volume than none. Right. And then you develop a relationship. So then over time, what happens is they come to you first. So whether it's real estate or not, because there are some times where you have the same situation with funds that you're dealing with. So whenever they're creating a new fund, these are people, for example, that we met at Limitless both times, or you're in an existing fund, or they have a proposition for you that they won't make available to the public. They come to you first because they know that you are an investor group versus a singular investor. So to me, I think it goes back to that relationship point. Everything in this industry, as one 9-figure person has told me, advised me in the past, rather, if you're familiar with Stephen Klubeck, the guy who was running to be California governor, he told me the number one asset you have in this industry is your reputation. So you recommending anything to anyone, you had better be able to back that up. If somebody fails, you had better be prepared to pay that person off and make that person whole. You better be prepared to be a person of integrity and say what you mean and mean what you say, all of the above. And so I think down the line, as things happen, those relationships, I can tell you even today, there's something going on where I'm not at liberty to say, but those relationships keep coming in handy because you trust them. They trust you. They know that I'm the kind of person who they can go out and do any work for me. Their bill will be paid within 5 minutes of them sending me the invoice. Like that is the standard for me. I do not wait to pay people. I do not like it when somebody has to come and remind me and say, hey, can you please pay me for the work that I did, for example?
No.
The relationships, they're huge for me.
Yeah. Our team, we've got plumbers, electricians, and because of how we treat them,
Yeah.
if we've got an issue and it's winter up there right now, we've had no heat calls happening left and right. And we call, they show up. They don't just pick
Yeah.
up the phone, they show up.
Yeah.
Tony, if you're out there, Tony, and you're watching this, Tony loves us. I think we just ended up buying him a new van for his plumbing company. And
Oh, wow.
Kevin, our electrician out there, he's actually on one of the shows. Him and his girlfriend are buying their first property right now because
Oh.
he caught me in the kitchen on a rehab and started asking me questions. And, you ask me a question, I'll give you an answer. What's the biggest hurdle you've had to overcome as an investor, and how did you solve it?
I think the biggest hurdle is trying to get a feeling of confidence as you're entering any deal. Honestly, every deal that you're entering, there's always a sense of hesitation on, am I doing the right thing? Is this the right deal? Is this going to work out? And part of it for me personally is it kind of goes back to reputation. And for me personally, it's reputation with my husband. Not because he's holding me to the flame, but because when we first got married and he helped me to pay off my debts and whatnot, I remember telling him very distinctly that I'm going to show you that your effort was worth it, that I respect money and I respect the gift that you gave me of allowing me to pay off my debts. And it's not that it's, me and him separate. We absolutely see each other as a team. But for someone to have continued trust in me, who is the primary decision maker on how our money is allocated and invested and whatnot, he has to be able to continue to trust my judgment and how I approach things and how I analyze and research things, and see that I am respecting his part in this whole thing, which is he earns the money, I invest the money, right? That's kind of the simplified version of it. So to have his respect as I move into a deal means a lot to me, and that's why I worry a little bit more and am apprehensive. And I think some people might say I do, like, I'm almost like an over analyzer when I look into deals, but that's because I'm really trying to make sure it's a good deal, which means that I'm not doing deals very often. I'm much more deliberate and a little slower than someone else might be.
There's nothing wrong with that.
No. And there's really no way of getting over that hurdle, because I think everybody needs to have a healthy sense of apprehension or fear, just to the degree that you're really looking at all the key aspects of a deal that you should be, and not just going into it based on emotion or excitement, or even just because you know somebody. I think there are many, many times that I can tell you I was like this close to executing on a deal, and then I backed out because I kind of was able to identify this is excitement. The numbers are not matching up. The math is not where I want it to be. The people are great. The project is great. But look, I have a personal cash on cash threshold. And a lot of the times the projects don't meet it. And I know people are going to say you're crazy, or this IRR is an amazing IRR. And I am saying, okay, but it's not part of my playbook.
Okay. Yeah, 100%.
Yeah.
If you don't like broccoli, don't eat broccoli.
Correct.
Correct. If you don't like the noise that's on the radio station, shut it off or change it.
Right.
If the deal doesn't fit your character, it doesn't fit your character. You shouldn't try to wrap your personality or where you're comfortable around somebody else's mindset.
Right.
Yeah.
Right. And I think there's a level at which you get to where you're able to more comfortably make those judgment calls with a different threshold. Say, like, you can be a little bit more flexible. Okay, if it's not at 10%, I'll take 8%, or whatever the case is. But when you look at your portfolio as aggregate and you understand what all those liabilities are, only you can know what you can and cannot afford, right? You know what your risk threshold is. And this is where that project manager in me comes out, right? The project manager, your biggest job is risk mitigation. So it's my early years. I would say I'm still centrally focused on risk mitigation rather than risk taking at this point.
Well, as an investor, that is a hard lesson for that newbie to learn.
Yeah.
Because, I mean, when I was younger, I took more risk because I had more time to leverage out of it. Now, I'm not younger. I look at a deal totally different now than I did 20 years ago because I'm not that person anymore. I'm this person now, and I have a different set of parameters.
Yeah.
My rate of returns have changed from back then. The market has changed from back then. Everything changes. But my core doesn't.
Yes.
Yeah. And you know your core. You already know you're good.
When is back then for you? When did you get started, by the way?
2001.
Holy moly. 25 years.
I think all they had back then were log cabins and outhouses. They didn't have like plumbing and electricity back then.
I thought they had teepee tents at that time.
Oh, well, yeah, those came eventually.
No, 25 years is a really solid length of time to see really good shifts we've had economically and policy-wise.
Yeah.
And a lot has changed.
I have seen the train come around the tracks. This is my third time going around. So,
yeah,
it takes a while for the cycle to go in all aspects of it. And, this last one has been interesting because there have been, like this market, like you said, should have tanked a long time ago, but there are artificial indicators in there that have been keeping it high. And, there's a lot of different variables, and we'll save that for another show. This is your show. And being your show, I'm expecting that this is going to be a really interesting answer. You're educated, you study, you do research. Is there a book that made an impact on you or a significant impact on you as a real estate investor?
I actually have 2 books.
We'll
I'm going to give you... Yes.
I'm going to ask for a second.
Yes, that's fine. I'm going to give you one book that is very relevant and practical. And it's this one here.
I love that book.
Do you? It's called Best Real Estate Investing Advice Ever, Volume 1 by Joe Fairless and Theo Hicks. And it truly is the best real estate advice ever. It's very comprehensive, in my opinion, as far as real estate goes. Very, very good advice. And I used it a lot when I first got it.
That book is why I have a podcast.
Really?
Yeah.
What was in the book that made you start the podcast?
Well, he was saying, if you don't have experience or this or that, one way to get experience is that you could create a forum where you're giving out education or something. And Joe Fairless has the record for the longest running uninterrupted podcast on real estate.
Wow. I did not know that, actually.
Yeah. And I don't want to say it's his death clock. He calls it something else in the book, but he's got a clock on his wall that's a countdown for when he thinks he's going to pass to the next realm. And isn't that interesting that he is tracking that and, using that as a meter to where he goes for investing as well, a life clock. I think that's what he calls it, his life clock.
That is very fascinating, actually, because you're both confined and not confined within this time and space.
Yeah. All things are possible. You have to feel it first, right?
Can I just say one thing real quick? Because what you just said there, it was a very quick comment, but that is actually the key to manifestation. Most people don't realize that, but it does help me segue into what I'm expecting is your next question, which I'll let you ask.
Yes, please. Do you have a second book that had an impact on you as a real estate investor or as a person?
I am so pleased you asked, because it's a bit of a black hole that I'm going to take your audience with. But now having heard you for the past few minutes, this was the perfect choice I could have made. It's a very scary looking giant book. Okay. It's called Reality Transurfing by a Russian gentleman named Vadim Zeland. And this book is actually a masterclass in quantum mechanics.
I love you.
Yeah.
You know, that is going to segue so great from where I'm going right now. So I
Yeah.
love this show. I always learn something. I mean, I've had to pack up a lot of my books. That's a different story. But I'm always getting great recommendations. So,
Yeah.
reality surfing.
Yes. Yes. So TARANS surfing. So it's this guy who, a long story short, this guy says, I basically got this download one day and here it is. It's all in this book. And so the book, like many other authors who have come before, Wayne Dyer and Esther Hicks and all of those people, I always like to say, now that I've listened to so many of them over the years, many who I didn't understand and some who I did, I say, okay, everybody was speaking a language. They're all talking about the same thing. Honestly, they really are. But maybe I don't understand Japanese yet or Cantonese, but I understand French or English. And so to me, this is my French, where I am fluent enough to talk to people and have a normal conversation, but I may not be a master of it. But what's important about this book and his delivery, or his language rather, is that Vadim makes the concept of manifestation extraordinarily easy to understand in this book. It does come off as very complicated, but if continue with my example, if French is your language, it makes it very easy to understand. And why I bring it up on a real estate podcast is because a lot of our American culture,
Yeah.
right? We are bound to these rituals throughout the year. Okay, new year, new me, and then I'm going to manifest this and goddess and queen and this and that. But the reality of manifestation is really rooted in emotion, just like you were saying not too long ago. And if your emotional state does not match up to your desires, they cannot align.
Yeah.
And so this book is actually written very logically. It's not written from an emotional perspective or a woo-woo perspective, but it has, beyond the first chapter, which I always find the first chapter, if you can get the first chapter, you don't need the rest of the book. But the rest of the book does have a lot of other ways to help you integrate this understanding. And so I actually, out of form for me at the time, I usually spend, starting like 7 years ago, every year I read this book once and I go through it. Yeah. It's really important to reintegrate that concept back and back. And I used to go through it with a group of people. So every week we would meet. I think there's 19 or 17 chapters in here. And we would break it down. The first 2 years, I think we were trying to understand it. And at that time, there were no extra resources to understanding the material because he is so obscure and unknown. And then people started to do videos about him. And then there was a lady, Renee Garcia, who studied under Vadim directly and then got blacklisted by him or whatnot. But she's able to help people understand the concepts and integrate and whatnot. So for me, I use the word integrate because every time I learn something new, in the past, I used to spend 6 months on that singular thing of just integrating it and integrating it, integrating it. And you usually don't need 6 months before it's integrated to the point where, like, at the end of 6 months, you're like, what was I doing? You don't remember because it's already part of you.
So, how are you feeling
Now, I would say these days I'm feeling very neutral and at peace. I am trying not to get dragged down into any of the hot mess that is social media and news and society and culture. And at this particular juncture of the year, I call it my witching hour. I like to
Right? I'm listening.
I like to tell people, like, by the time winter rolls around, which we don't get much of in Dallas anyway, I like when the world goes quiet. We're not socializing as much because supposedly it's cold, people don't want to come out. I need the silence to recalibrate. This is our fiscal new year, but the real and true New Year's is not until the spring solstice in March. So between November and the end of February, I like to dramatically slow down socialization and activity and networking and working on projects. It doesn't always happen the way I want it to, but that's why I jokingly call it my witching hour. Like, leave me alone. I need my slumber. I need my quiet to do what I need
Okay,
to do.
fair enough. I'm going to push the envelope. And thank you for that book recommendation. I mean, when I get resettled to my next location, I'll be hitting the Barnes and Noble. So thank you. I appreciate that. Pushing the envelope. Is there a third book you may recommend?
Honestly, off the top of my head, I would tell you yes, there is. I just don't know if it's everybody's cup of tea. For me, it was the 40 Rules of Love by Elif Shafak. She is a Turkish writer, and it is based on it's a fictitious story, but it is based on the very famous poet Rumi and his teacher Shams Tabriz, and their relationship that they developed.
I think there was reference to this. Oh God, the book used to be right there in Robert Greene's book.
Oh, I don't know.
Robert Greene was Mastery, Seduction, the 40 Laws of Power, stuff like that.
Yeah, this is it's a book that is based on or alludes to because of the nature of the people that they're talking about. Rumi and Tabriz were in Turkey, like Turkey, the country of Turkey at that time, Anatolia. I think it was back in 1500s. And so it's a Muslim country primarily and still is today. So it has whispers of that throughout the book. However, that's not the primary purpose of the book. The 40 Rules of Love are how you engage with people. The 40 Rules of Love. It's not about rules in that traditional sense, but the book set me up really well based on its premise for how I interact with people.
Kind of like the law of gravity.
Yes.
Yeah.
Yeah. It's like I said, it's not everybody's cup of tea, but it is one of those most brilliant works of writing. Both of her books are by Elif Shafak. And I can honestly tell you that after I read this book, for me personally, it changed my life.
Cool. So here we are. Nida, you've done a great job. I don't know what other question I would ask you. I will ask you this. What's next for you, and why not get started today?
So what's next for me is to continue where I'm at exactly right now, in part, which is to continue to watch the market and continue to understand what things are changing and what's shaping what, because some of that is even challenging to understand these days. We have a lot of AI-based impact or not.
Yeah.
Right? There's a lot of talk about how it's just a big bubble, and I do see that in certain aspects of it, but I also see the application of it in certain other specific industries and niches and how it's impacting us economically. I'm seeing the relationships happening with the Gulf countries and America and all these oil power plays and technology investments and so there's a lot that's going on. And I really need to understand and find my footing in this. And then the next other segment of this is to understand alternative strategies within single family. So bringing it back down from the global scale to a more manageable scale, which is to understand things like pad splits. They sound great right now, but I know it's nobody's first choice to be living in a one room while sharing 6, 7, 8 other rooms with people in the same house. So will it be a long lasting strategy? I don't know. Looking into businesses like assisted living, I need to understand how much liability that is and what the market for that. There's a lot. And so trying to venture out of single family means I have to understand and see what strategies are out there, what's working, what would line up with me, what I can digest or not. And so there's nothing that I'm really taking action on right in the moment.
Okay. Okay. A lot of the investors I've had on the show over the past 2 years have gunpowder off to the side and they're in the same boat. They're waiting to see one of those indications or one of those triggers that they're waiting to see happen before they jump back in. And this is, like you said, single family or multifamily or commercial or office space, whatever it is. There's different indicators in every different real estate industry. I call them the experts that they're watching and they're waiting. I mean, there's a lot of capital out there. There's a lot of people interested to deploy that capital, but to yourself included, it goes to the smart investor who's watching the game and not just chasing that shiny brass ring.
Yeah, and I see that both ends of the coins. There are people who are, I think, just temporarily waiting with their gunpowder because they're just waiting for small policy shifts. Maybe this thing with Trump's suggestion goes through of not allowing institutional investors to buy up residential properties, and then you have the middle tier investors come in and swoop in on all of that. I don't know, right? Maybe we have yet to see what happens with some of the bigger commercial buildings and deals that's going on. We still have to see if there's going to be any fallout from syndications on commercial multifamily properties that were underwritten based on years past, and they are or have now come to the end of that loan cycle and they're having to refinance, or there's fallout. There's a lot going on. So I always like to I like stability. So as long as my world is stable, otherwise, I don't want to add to it until I'm ready.
This has been fabulous. Did you enjoy yourself?
I would honestly tell you that there's a few things that came out of my mouth that I learned about myself that I didn't quite realize before.
Did you have fun?
I absolutely did. That for me, that is fun, by the way. For me, discovery and learning is tremendous fun.
Well, I love doing this because I get to talk to wonderful people like you. I get to put a spotlight on you, kind of sometimes put you under the microscope and figure it all out for myself as well. You brought a lot to the show. I really want to thank you for all of that. For anybody who's on the show today, if you would like for them to get in touch with you, how would you prefer that they contact you?
I think probably the best way is probably my email, Atlantis Felix LLC @gmail.com.
Okay, we'll definitely get that up in the show notes. The last question, which is always a curveball, it was not on the list I sent you. And I always love this one because I get some of the juiciest reels from this. What's the question I should have asked you today that I didn't?
Oh, geez. I'm not sure that you really left much out there because we were able to cover a lot, but it might have been curious if you had maybe asked people's backgrounds like where they came from, where they were born. Like, I think a lot of the investors that I've met, they have such diversity of hobbies that they do, what they enjoy, that has nothing to do with real estate. And because you and I then could have totally gone into a 2-hour black hole or more about quantum mechanics and spirituality and woo-woo and all, you know what I mean? So
We're painting because I'm an artist.
and you're an artist, exactly. And by the way, this podcast was fun because I think you make it fun. It's like, it really is, you're just having a conversation with a friend. And I don't think that we get a chance to do that these days, because people like to stay at the surface level, right? And so I rarely get a chance to just talk at a deeper level where it feels, it's casual for you and me, but it would be feeling very intense for somebody else.
Thank you. I appreciate that so much, because it's building relationships. And
Yeah.
if anybody watching this learned anything, just like talk to someone normal, right?
Yes.
You know, just
Normal.
yeah.
What is that anymore?
Well, I mean, they may or may not be watching this, and I'll get the backlash on it if they are. I have a client I have a hard time communicating with. I feel like I'm talking to an AI bot. They don't have the emotion, they don't have the personal connection that I believe is required if you're going to do real estate. It's beyond a spreadsheet for me because there's people.
Right.
I'll leave that alone. Nothing else said. But I enjoyed you so much. I can't wait to see where we are 6 months from now.
Likewise.
See where you are. I definitely want to keep in touch. Of course, I'm going to give you all this footage. If you want to slice and dice it, give it to your VA. Use it to promote where you're going, what you want to do, something to give you to do during your witching hour.
I honestly wish I had more time in my witching hour right now, but jeez. I think this year is going to be much more of a launch than you and I expect. We'll see.
I truly appreciate you being my guest on the show today. Any last words for our viewers out there? Anything you'd like to pass on?
No, I think just a message of steady does it. Stay consistent, stay steady, and it is a really, really good formula for success. You can't beat it.
Thank you so much, Nida.
My pleasure. Thank you,
All
Brian.
right. Ladies and gentlemen, all my real estate peeps, rock stars, entrepreneurs, and real estate investors, this is Brian Lucier from the Why Not Real Estate Podcast signing off, and we'll see you on the next one.